Welcome to the Holistic Wealth and Health Podcast. Your co-hosts, Jason Smith and Bryan Bibbo, will inspire and teach you how to prosper in your mind, body, and spirit, not just your financial life. Joining forces with field experts, Jason and Bryan are here to help you focus on what matters most in your life, living well.
Welcome to the J.L. Smith Holistic Wealth and Health Podcast. I'm Bryan Bibbo, and in this episode, we're going to talk about an important day coming up August 14th here, National Finance Day. The importance of it, why financial literacy is missing, and why should we be saving for now, soon, and later, and properly prepare yourself and generations going forward to make sure you have a strong financial plan in place. They joke around and consider it a holiday, right? We all wish we had the day off work. But in all reality, it's August 14th, and it comes around just to get an understanding of what are good financial practices to have now and into the future. What will bring you into that retirement? And one of the bigger things that we see is in America, debt is at all-time highs. Same thing with the national debt, individual consumer debt. That's not a good trend that we're going down. So we need to make the awareness of, hey, this debt that we currently have as individuals isn't going to be healthy. And it also creates a lot of stress on the individual. Think about this. Some of our audience members know someone that have 20, 30, maybe even 40,000 plus in debt, whether it be student loan debts or credit card debt. And it's hard to get out of that hole. Once you're in that hole, what can you do differently to get out of it? So National Financial Day is meant to give us the understanding and the literacy of why finances are so important. Yeah, the thing is always paying yourself first. There's an old adage, pay yourself first. And what we mean by that is when you have a paycheck, a portion of it should always be going to your 401k or whatever the employer is offering in a match. Here at J.L. Smith, we have, if you put in 5%, we'll match up to 80% of that, which is a 4% match, which is actually fairly above average for what you see across America here. When you have that paycheck, just let that money go into that 401k. You get that match, that's free money. In this example, it's like essentially a 4% raise. So start there. Like that is the first thing you always want to do and what we want to educate on. Then you come across the scenario of, Bryan, how do I even do that? I'm living paycheck to paycheck. The best thing is to have a budget and audit your expenses because there are always going to be expenses that come up, those one-time things that come out of the blue, hey, the refrigerator breaks down or the garage door's not working. I don't know how to repair it. I got to get someone out there. But you need to have a nest egg to be able to take care of those one-offs. What we tell everyone to have is, as bad as this sounds, and no one ever likes to hear it, do have a budget. Understanding what your monthly expenses are, whether it comes from groceries, entertainment, automobile expenses, vacation expenses, have that fine-tuned. And one of the examples I'm going to give you, my wife and I, we looked at our grocery bills some years back and we said, how can we be saving money? We were going to stores like Heinen's, Giant Eagle. So for some of you across the country, maybe that's a Publix nearby you. And the prices are probably average or above average. So we started looking at some different stores, some more discounted grocery stores like Aldi's or Mark's, which is close by us. And we realized, hey, they might not have everything that we want at that specific grocery store, but we have the ability to go there to get 70 to 80% of the groceries that we actually use and need. And that really cut down our grocery bill anywhere depending between 20 to 40%. And we've seen higher and higher grocery bills lately because of inflation and everything else. I know all of these Americans are feeling the squeeze, but where can you go like that to cut down that grocery bill? Also, a lot of what I see is Amazon purchases. It's so easy to click a few buttons and have something at your doorstep. In addition, credit cards, right? That credit card's hooked up to that Amazon account. They've made it so easy now for us to buy things, right? You literally click a button and something's going to show up at your doorstep in sometime 12 hours, maybe 48 hours with Amazon. God bless them. And it's that convenience of things, but you really don't have the emotion. You don't have the emotion of spending the dollars. Think about that. If you purchase something offline for $100 and you swiped a credit card, it went right through. But think about yourself actually going to the store and counting that actual cash out. It has a way different emotional attachment to it. I think that's one of the main reasons you see more people living paycheck to paycheck, because there's no real emotional attachment to the money, where there used to be a huge emotional attachment to the money when you were pulling out coins and you were pulling out dollars. So I know some very successful people that are worth, we're going to say multimillionaires, and they still go under what they refer to as an envelope system. As money comes in, they will pull the cash out of the bank. So all of a sudden they have this vacation fund. They're going to take one nice vacation a year that's going to cost $3,000 or $4,000. Every paycheck, they're putting 50 or $100 into that envelope. And then also, hey, guess what? Here's the grocery bills. They're putting it into more of an envelope system, so they still have that attachment to their money. The main thing I'm getting at is realize where you're spending the money. It's very difficult to just continually swipe a credit card, And a lot of those credit cards have raised their interest rates up to 20+% now because of where we have normal interest rates at. So I share that with each and every one of you is you might not be in this situation, but you might have a child that's in this situation or a family member. So really have a game plan in place. The next thing is like setting goals. There's a study out there, and I don't know the exact statistics, but I just saw it in June at a conference, and it said if you just have goals in your mind, you have a 14% rate of accomplishment. Then if you actually write the goals down, it goes up slightly to 16 or 18%. But if you make your goals public, and what do we mean by public is sharing it with others or putting it on a social media account or whatever it may be, it goes up that you're going to meet your goal all the way up to 86%. All right. So what I share with you is if your goal is to, I want to get into a better financial shape, share that goal with someone. Have an accountability partner, whether it be your spouse, your best friend, your family, whoever it may be. Make sure you set those goals, but also make them public. Don't be ashamed. My sister or something, or myself, let's say I had $40,000 worth of student loan debt. Guess what? I said, I'm going to pay this off before this time. And I'll actually give you my real life example. I walked out of school some years ago with $55,000 in student loan debt. I promised myself by the time I was 30 that I was going to have this paid off. I told my wife that. I told actually my father that too. I was like, by the time I'm 30, I'm going to have this paid off. Yeah, did I make some sacrifices along the way? Did I skip going out with some friends here and there to be able to get this paid off? Yeah, but I reached my goal and I also made it public too. So that's very important. We talked about just saying your goals in your head, writing them down, but the thing is to make them public. In addition, some other ways to save is through payroll. You can have your payroll with most companies go to multiple bank accounts. I've seen successful people just go, hey, $100 or $200 of my paycheck, I'm going to have it go into a savings account, maybe at a different bank that I don't have a debit card to, or that I don't have direct access to unless I walk into that bank. That again brings that emotional attachment to the money. So you can kind of see a little bit of my background story of what I've done and what I've seen over the years. But I can tell you the most successful people and the people that are the multimillionaires of the world or with tens of millions of dollars had a game plan in place. And they continue to follow that game plan, rain or shine. There are going to be dark days along the lines, but I'm going to tell you this is tough times don't last. But good thought out, tough financial plans do last that are going to survive that storm. This is a sensitive subject that gets me a little riled up when we talk about it. I'm going to go back in time. I had a 6th grade teacher that taught us social studies. And in that 6th grade class, God bless her, she didn't just talk about social studies. She taught us how to balance a checkbook. And we would walk around the classroom and we would buy certain items and we'd have to balance that checkbook. It was the old school register for the audience that knows exactly what that is. And writing checks, right? That's a thing of the past mostly too. But it was more of us maintaining that balance, understanding money. Then in high school, we took an economics class that talked about money, what does it cost to raise a child, so on and so forth. And that was a lot of eye-opening experience. I was blessed to be able to have a grandfather that was able to pay for my schooling. I went to a Catholic grade school and a Catholic high school. So I was blessed with that, and they taught some education. But most schools don't have any financial education associated with it on how to maintain the day-to-day living. Yes, they might talk to you about the stock market, they might talk to you about economics, but not the day-to-day living of managing a household, making sure there's a proper budget in place. So I worry about that indoctrination that we're running across these institutions where it's not taught, where in a lot of other countries across the world, it is taught. It is a main part of the curriculum. I think that needs to change. Whether we petition our governors or we petition the elected officials to make the changes, we definitely need to do that. But it starts at home with each and every one of us. It starts at home, right? Whether it's going to be your grandchildren or your children, you need to teach them about money and the importance of money. Another great example I share with my children, whatever money they want to save, I will actually give them double that. In the sense of this, is I said, what companies do you shop at the most? My daughter said Target and my son said Walmart. Great. I said, you have this much money in your bank account from, hey, when you were baptized, when you were born, so on and so forth. How much of those dollars do you want to put into that stock? Obviously, I explained to them what stock is. You're owning some of the company. That's a whole different conversation here. They both put in that money, and I matched it. So that was one way for me to teach them. In addition, is whether it's the children or the grandchildren here, is I've now just put them on a kind of a plan where they get a weekly allowance. I'm giving them $10 a week each. And with that $10, it comes a multitude of chores, doing laundry, taking out the garbage, but more importantly, making sure that their room is clean, and also the bathroom that they use, that they clean up after themselves after they go in there, because other people use that bathroom, right? So don't leave toothpaste all in the sink, everything else. So it's also setting the stage of the future. Don't be afraid to talk to your family about money. We have this kind of snafu that we don't talk to our family members about money. I think it's super important that you talk to your family members about money, because where else are they going to learn and start at a very early age? Obviously, in the position that I am in the financial industry, it's a lot easier for me to talk about that. But with my children, I've kind of taught them all along the way, because I really wasn't taught that. I had to learn it through education and studying and just kind of being more of having the nerdiness, I'm going to say, of looking into the details of those things. So with that being said, it's so important to make sure you're sharing this and educating them along the way. Like, I'm teaching my children, how much does a car cost? What is a mortgage? Yeah, my daughter's 10, my son's 7, and is a lot of this going over their head? Absolutely. But it's like going to church. It's the old adage, like, if you continue to hear, the message will start to stick with you. So I just keep standing on my pedestal, continuing to talk to them, continuing to go over these things along the lines there. Yeah, retirement is different for each and every person out there. Some people will never retire. And some people will retire at 55 years of age, 60, 65. So it goes back to that goal setting of what does retirement actually mean to you, and speak that goal into existence. Essentially, publicly announce it. Hey, I'm going to retire at this date. There's now a way higher probability of you reaching that goal. But it all starts and having a game plan in place. There's all the studies that out there that say if you start saving in your 401k, your retirement plan at 20, verse 30, verse 40, verse 50, and how the long-term effects of that. And everybody knows for the most part that if you start in your 20s, way higher success rate comparatively if I start in my 40 or 50s. So I tell everyone to start contributing, get that free match in your 20s. Don't even think second guess it, right? Also, talking to a financial advisor. Chances are your parents or your grandparents of you being the millennial have a financial advisor. A lot of financial advisors, and I know we do this at JL Smith, is I always share with our clients is like, we are here for you. We are advocates for your friends and your family. If any one of your family members wants to talk to us or just speak to us for an hour to get some education, to get a roadmap in place to make sure they're going down the right path, we allow that. We don't charge them anything. So I can't tell you, we've done that with hundreds of children and grandchildren of our clients. So as a millennial, don't be afraid to ask your parents or grandparents, do you have a financial advisor? Can I speak with them? That's super important. That will greatly exponentially increase of where you're going. And as we continue to go up in age, let's talk about 40 or 50-year-olds. That's the time, if you haven't already, to start looking for a financial advisor to make sure you're on that right track. I see so many people that haven't put a financial advisor in place and they want to retire in a year or two. Could there have been things that you have done all along the way that put you into a better situation? Commonly, what we see is very hefty traditional pre-tax 401k or IRA balances. And what that means is we've never paid tax on that money. And that money is continuing to grow tax deferred, which is great while we're working. But guess what? Eventually, we have to pay the piper. We owe Uncle Sam XYZ amount of dollars out of that. I always say, who are you in business with in your traditional IRA? Everybody looks at me like, what do you mean? I go, guess what? Uncle Sam owns a portion of that account. How can we get it out most tax effectively? So you got to think about taxes. You also have to think about the life insurance retirement plan too. There's the opportunity when you're in your 30s or 40s to set up a life insurance retirement plan, to use some of those dollars and get them out tax-free. Not necessarily in the case, everybody looks at life insurance as one aspect of things. It's just, you know what, I'm betting on my death. If I'm gone tomorrow, you know what, my family's going to be XYZ. I see so many people get into their late 50s, early 60s and go, I don't need that policy anymore. I've saved so much more money in my 401k. Life insurance is more of an investment tool that can accomplish more things than a death benefit, all right? So you got to explore those things. And if you're a grandparent out there and you have a grandchild and you want to do something for them, maybe starting a college account for them, or maybe even a life insurance policy where they have some cash value growing in it. So there's a lot of things that people can do to start preparing for retirement. But the main thing is, don't hesitate to talk to a professional. There's a lot of advice out there online, but that's kind of just like general statements. There's not specific investment advice to you as an individual. Along the way, you've been educated, right? You've been educated by someone that inspired you. How do you pass on that inspiration to someone else, whether it's a family or a friend? Well, you know what? Don't hesitate to keep J.L. Smith a secret. And I say that to say, if you know any friends or family that you can send our way, we're happy to spend the time and do that. Now, on your end of things is, there was a book you read or something you did along the way to make you save. How do you pass that on? What I've seen commonly is kids don't necessarily like to listen to their parents about finance. So getting a third party in place is always the safe haven here. So don't be afraid to pay for a course for them to attend to beyond college, or see a financial advisor. That's probably the best way. I've seen many people over the year use as a gift for the holidays. You know what? Instead of getting you a check this year, or traditionally what I get you is, I'm going to put you in front of a financial advisor and I'm going to pay for that education. That's huge. That could set them up for great success. And maybe it costs you a few hundred or maybe a few $1,000s depending on the financial advisor. Or with us, we don't charge for those services because you're already a financial client. But that could greatly, exponentially increase the route of where people are going. So there's many ways of paying it forward here, but the main thing is, I'm going to say, is education. Pass along the education, whether it be a book, a financial advisor, a podcast you listen to. All of those are great things. The main thing I just want to say is, make sure financial literacy is taught, right? Make sure financial literacy is taught. It's what we teach to ourselves, this generation, and the next is what's going to matter. And we don't want to see that as a society continue to go by the wayside. We can make the change. And I always love the quote is, be the change you want to see in the world.
Thank you for listening to the Holistic Wealth and Health Podcast. We hope we inspired you to make changes so you can live your best life. If you want to find out more about what we do, or if you want to have a holistic wealth and health financial plan, please call 456-833-7000. Please subscribe to the podcast and share it widely with your friends and family. Financial planning and advisory services are offered through Prosperity Capital Advisors, PCA, an SEC-registered investment advisor with its principal place of business in the state of Ohio. J.L. Smith Holistic Wealth Management and PCA are separate, non-affiliated entities. PCA does not provide tax or legal advice. Insurance and tax services offered through J.L. Smith Holistic Wealth Management are not affiliated with PCA. Information received from this podcast should not be viewed as individual investment advice. Product discussions and illustrations are hypothetical in nature and will vary based on many factors, including, but not limited to, age, health, product, insurance carrier, and product design. You should consult the insurance carrier website and policy for detailed information. For information pertaining to the registration status of PCA, please contact the firm or refer to the investment advisor public disclosure website, www.advisorinfo.sec.gov. For additional information about PCA, including fees and services, send for our disclosure statement as set forth on Form ADV from PCA using the contact information herein. Please read the disclosure statement carefully before you invest or send money.